All right, it's showtime. We are live. Thank you so much to those of you that are watching this back. Thank you to those of you that are going to be joining in live just as we're getting started here. I do have a guest that will be coming on, so we're going to be talking about things, just the latest with GameStop, Bitcoin, cryptocurrency, the process of wealth building as a whole. This individual I'll be having on, maybe on Tetron more frequently in the future. We'll see how it goes today, and we'll go from there. Yeah, and just really trying to take things to the next chapter. I've been busy like everyone else. Everyone out there is busy, right? That's such a lame excuse. But to anyone that's been following me for a while, I just want to apologize that I've been offline. I could be better, I can do more, and I'm going to hold myself to a higher standard. And that's really going to start in 2024 and beyond. But I'm going to start right now because, going from 2023 to 2024 is just really the calendar you're changing, right? That doesn't actually impact like, oh, the calendar year changed, like now I can do stuff, right? Like you can't think like that. So that's, I was like, you know what, just do the stream tonight. Really, 2024, the start of it is the goal to like lock and load and just go and really take things to the level I want to take them. But for right now, it's like it's still 2023. Let me still make the most of it. You know what I mean? Just got to do the most I can. So just gonna keep improving for you guys. And I feel like I've been a lot of talk, like, oh, I'm gonna do this, I'm gonna do that. And part of it's been like trying to find myself and whatnot. But I feel like I have a pretty clear vision of how I feel, what I want to do, where I want to take things, and stay tuned because it's going to keep shifting and adjusting. And I'm just going to keep pivoting, right? Because I feel like the best thing to do is just keep going. And that's pretty much, I feel like, something I'm learning in life. Like, no matter what you're doing, if you just keep doing it repetitively, that's important, right? And it builds you up. So I have to keep streaming, keep putting out content, keep trying to take things to the next level. And I still absolutely love GameStop. Let me be perfectly clear. But I still want to talk about, things like Bitcoin that I'm becoming more and more familiar with, just the process of wealth building. That's really where my head is at because that's something I'm doing. And I said this to my coworker today, like joking around, but he's like, "This is a good name. Maybe you should use it." But I was like, "Yeah, fuck it. I'm just getting rich," and like kind of saying it jokingly, but at the same time, I'm dead serious. Like, I am going to be rich, and let me be perfectly clear: rich goes beyond money. Rich is a mindset, in my opinion, and so I'm going to show you guys in real time or just a YouTube like rise up of someone who's going to build wealth and going to get rich. You can mark my words. And again, rich is my definition of rich versus everyone else has different ones. But let's hit the chat real quick before we introduce our guest today. Ryan Suggs, is good to see you, my man. Ryan, good to see you as well. Jesus, good to see you as well. Pink hand waving. Hello. That's what it comes up on here since I'm using StreamYard today. Or even at Could, Meagle, good to see you. I've been slacking. That's the truth. I mean, I've had a lot going on. It's really busy with my job at the end of the year, a lot of family stuff going on right now. So it's not like I have been doing nothing, but at the end of the day, it is still excuses because I haven't been here. So I'm here now. But hey, welcome back. Guess not. Yeah, Fresh Maker, stick with me, man. Stick with me. I appreciate you so much. Everyone, Freshmaker is such an OG of this channel. He helped me the day I got the mic. I went to use his headset the first time. Like, the audio isn't working. What's going on? He's like, did you make sure it's plugged in all the way? Because this thing detaches. And once I plugged it in all the way, it worked. And I was literally about to return it. But here we go. Richtron Invest. Okay, back at it again. Yes, sir. But here we are. No, it's not Richard Newton. Nobody you guys necessarily know. It is my brother Zach, but I do want to make him more frequent on the channel and just some different things we're trying to do together. So we'll welcome in now, Zach. Let's get you in here. How's it going?
What's up, guys? How's everyone doing?
Oh, not the best audio, but that's all right. We'll make it work.
Yeah, does it sound bad?
It's not terrible. You sound like kind of far away, but we can
Using
just
the
let it
Beats right now, so built-in microphone, but
minimal. Or
it is
maybe it's
what it is.
low for me. I don't know. It's kind of hard to tell. So if I'm like yelling over you at any point, my bad. But I was able to figure out I could do this more than just a podcast format like this. You can actually get this on the screen here. See, boom. If you want to go through some numbers, I feel like a good way to start though would be kind of introduce yourself, or introduce yourself in the sense like, what does wealth building mean to you, and why are you interested in building wealth? What does it mean to get rich to you? As I was kind of talking about.
All right, guys. So I'm Zach, brother of Tetron Invest here, and I'm hopping on today. Gonna try to become more part of this channel, and we're gonna try to build and grow. And as far as building wealth and becoming rich, as you were talking about before, we aspire for greatness. We want to build something big, and we just want to do it big. So we're just gonna keep on grinding, and we're gonna try to make it entertaining for you guys. And yeah, but as far as being rich, like, what does that exactly mean? Not just about having a lot of money, it's also about having freedom, in my opinion, and that's the most important thing, is to be free, be able to do whatever you wanna do.
Yeah, absolutely. Like I think it's the ultimate dream to just wake up every day, just do whatever the heck you want. Obviously, it's not that black and white, that simple where it's just like, "Oh, I'm rich. I'm going to go climb this mountain this day, do this, do that." Like obviously, to get to a point where you're wealthy and rich, so to speak, you have to have some responsibilities, some things that you're doing day to day, whether it's family, it's a business, it's passive income, it's all those different things combined. But, I think this channel, like taking it to the next level, really a great opportunity for us is to just show the journey of building your wealth and building yourself up and wanting to do better. And everyone that's joining me in these streams and as we grow, right? Like I want everyone else to do the same. It's not just going to be about me and you. It's about just individuals, continuously wanting to learn and doing more. But yeah, I'm excited to see where it goes. So I think we should hop into GameStop to start because I still absolutely love the stock, and I know you've heard me talk about it for a long time. You're
Of
kind of
course, yeah.
kind of on the sidelines, but that's all
Yeah,
right right now.
just disclaimer, like, this guy knows much more than me about GameStop. I'm just here to listen and learn similar to you guys, but, I've definitely heard a lot of information just being around him, so
Cool. Honored to hear that. Thank you. But yeah, so I feel like it's a good place to start, and also it kind of gives me the opportunity to show you, what I'm looking at when I'm reading about the stock and like what I'm seeing in front of me. And I'm happy I was able to put like some information on the screen when I was using the StreamYard in the past. I swear you weren't able to add like sharing your screen, or it didn't work for me or something. I don't know, but we're here now. It's working. But actually, let me quickly tweet this out. Let's see. Let's go to the side here. But with looking at this statement of operations, is this something you're familiar with? Is it first time looking at a page like this, or like when you see what's on the screen right now, like what kind of comes to your mind? Just while I'm tweeting it out.
so I can't say I've specifically looked at a statement of operation, but having just taken and finished accounting class, this is looking somewhat familiar, with the net sales and profits and whatnot. So I'm sure I can follow along if you go through it.
Yeah, for sure. We'll definitely do that. And then let's hit the chat again. Noah looks younger, an older copy of Noah. Yeah, dude. Nah, I think I look younger right now because I'm clean shaved. I just got the cut. You
Uh,
got like the full grown look going.
yeah, for real.
But yo, just so you know, Ryan and Freshmaker, aka Pat, OGs of the channel. They're consistent here. Appreciate them so much. So you got to
The
do the same.
boys.
But let me just get this tweeted out real quick. Get it to the Twitter. I mean X. That's what they call it these days. What do you think about that? Do you think X is a silly name, or do you have any opinion on that? Or you're like whatever.
I mean, I feel like Twitter's the classic, but if Elon wants it X, then it's gonna be X. So
Yeah, yeah. That's kind of the best way to put it, honestly. And all right, perfect. I got it tweeted out here, so that's good. We're rocking and rolling. But yeah, I mean, I just like it because I think it's where the most people are communicating. You see a lot of crazy stuff on there. I will say that. Sometimes I really do have to log off because it's just insanity on there. Or so what starts coming up in my feed. And I guess I could use a little more because you could do things where you mute certain words. You can create a certain list to only see like you select people, like you handpick people, add them to a list, and then you just can watch what people on your that list are tweeting out and retweeting. Excuse me, to kind of filter and whatnot. But like the For You page is wild. I mean, I feel like all social media, the For You page is wild, but especially like X/Twitter.
yeah, because it's uncensored, right? So could be
Yeah,
seeing a lot of stuff on there, but I feel
yeah,
like
but it's also
overall
like
that
it's like too uncensored. You know what I mean? Where like
yeah,
you could
yeah,
you could scroll
because
by like what the fuck? I was
yeah,
just going on.
some people take it a little too far and post some crazy stuff, but for
Yeah,
the most part,
exactly.
I think the uncensored part is definitely positive for X. So
Yeah, no, it makes sense. It's like people want to see the information and digest it, but of course nobody wants to see something like morbid or something like that. I think
right,
there's
right,
there's a
yeah.
balance, but whatever. This is not a conversation about X, so we'll hop into GameStop now. So what I'm showing you here is the Q3 filing, and the big deal with this, it's in my perspective, maybe not exactly everybody feels the same, but what it is obviously the Q3 earnings, but it's the final quarter before the last quarter of the year. And the last quarter of the year is GameStop's strongest quarter historically, and most retailers in general. Q4 is their strongest quarter, where they're just getting the holiday sales and the end of the year sales. And with this quarter coming in, it's kind of setting it up for the next quarter. And something that's in focus right now is full year profitability. So GameStop currently is not net profitable on the bottom line, but they're getting closer. And what I'm showing you here to go through it is first you want to separate like the left side and the right side. Can you see my cursor on the screen by the way?
Yeah, I can see it there.
Okay, so like you see me moving in circles right now?
Yeah, yeah.
Okay. So yeah, right here is 3 months, right? So 3 months means for this particular quarter. So Q3, this is the most current one. This is Q3 of last year.
You know
So
what?
this is
It's phasing in and out, the cursor.
okay, whatever. You get the point though. Where you
Right,
see 3.1, that's a loss of $3.1 million for this quarter. While it's still a loss, it's still significant improvement versus the same quarter of last year. And really, they continue to trim just excess cost and just be extremely frugal in terms of how the company operates. And that has allowed them to go from a $94.7 million loss to a $3.1 million loss, which then if you want to equate it to per share, you just divide this. So it'd be negative 3.1 million, right? Divided by 305 million shares outstanding, which gives you about negative 1 cent because obviously they round to the nearest penny. But if you look at the same quarter of last year, it was a net loss of 31 cents. So there's significant improvement there. And then if you look at the 9 months ended, so this right here, the negative 18 cents, that's the loss for the first 3 quarters combined. Whereas over here, negative 119 was the loss of the first 3 quarters combined last year for 2022. Does that make sense so far?
yep.
Okay, perfect. And then you have to start looking at the details, right? So the revenue is going down, which some people are like, oh my gosh, that's a horrible thing. Well, I'm not saying it's ideal for revenue to go down. What I see them focusing on is margins. They're more important about the bottom line being a net profit. Like they're more concerned about the bottom line being a net profit and basically focusing on selling higher margin items, things of that nature that will put them to that next level where they can be profitable. Because even though the revenue might be going down, if they're turning a profit on the bottom line, they can use that cash to either invest in something else in the future, which I'll touch on a little bit more in a bit, or repurchase shares, potentially do dividends in the futures, things that are known as like shareholder initiatives or providing shareholder value. And you see right here where it says interest income and it says net.
Yes.
Okay, sorry, sometimes it's hard to hear you. But interest income, what that is money they're earning on their excess cash. So you could see for this quarter they earned $12.9 million of interest income just on their excess cash versus same quarter of last year they only earned 3.7. And the reason for the significant change is not that they had significantly more cash, it's that interest rates are much higher than they were at this same period last year. So for a company like GameStop, where we scroll down here and look at their balance sheet, or scroll up rather, you can see their cash and cash equivalents is 909 million, and marketable securities is 300 million. Marketable securities is things like treasury bills, so like government securities that they're buying. That so when they mature, they just turn into cash. So this is basically 1.2 billion in cash on the balance sheet. And then if you look at liabilities, long-term debt is only 20 million. So they have almost 1.2 billion in cash and then 20 million in debt. And then the naysayers, right? The bears on the company will say, "Oh, well, who cares? What are they going to do with that cash? You can't sit on the pile of cash forever." Agreed. But when you think about the fact that Ryan Cohen is heavily involved in GameStop now, right? So he purchased shares prior to January 2021, the months leading up to it, really it was reported that he was a majority shareholder in December 2020, and that kind of started the hype storm, so to speak. Then he bought more shares in March 22, and then he bought shares in June of this year. Since then, he's never sold a single share. So why I'm saying that is I think it's really about the long term for them. And people say, oh, that's just an excuse. But I really think Ryan Cohen is seeing this as his next long term project. Like he's going to be there a decade plus, if not more. And with that, you don't want to just rush to spend your money. You want to have money in the bank. So when the right opportunity arises, you can take it. So if we do go into a recession and values of other companies are falling, then they potentially have the opportunity to make an acquisition, excuse me, and then integrate it into their business and then boost what they're doing, which part of what they're going to be doing in the future, it seems like, is involved with Web3 gaming because they're launching GameStop Player, which there's no release date yet. And we'll see what exactly it looks like, how exactly it plays out. But there's all these like different moving parts here. And if you're looking at it on the surface, I feel like it's like, oh, this is just a random company. It's just a dying retail brick and mortar, so to speak, right? But then if you look at the balance sheet and you understand the concepts I'm talking about, which again, I'm not saying just because I'm saying them, it's going to happen. It's obviously going to take execution, but that's why I think it's the most unique, misunderstood investment opportunity in the market right now. And that's just my opinion. You don't necessarily have to think the same. But does that all make sense so far in terms of the numbers and just perspective on it?
Yep, makes sense.
Cool. So then, I mentioned they could invest the cash. Now, this is something, I haven't looked into it too much, and I do have to talk about it more, or I have to research it more before I can talk about it more. But let's see. This right here, recent developments. On December 5th, 2023, by the way, the report came out, I think, like on the 7th. So this was like 2 days before. The board of directors approved the investment policy. The board of directors has delegated authority to manage the company's portfolio of securities investments to the company's chairman of the board of directors and chief executive officer, Ryan Cohen. Together with such assistance in management committees he may engage, the company's investments will be made in accordance with the guidelines set forth in the investment policy. The board may also approve non confirming investments and or consultation with the chief executive officer modify the investment policy from time to time. Mr. Cohen directs the investment activity of the company in public and private markets pursuant to authority granted by the board of directors. So what that means is he now has authority to make investment decisions. And some are speculating now that, and I'm still not sure how I feel about this, that with the company and this new investment policy put in place. When you look at Warren Buffett, you know how he owns Berkshire Hathaway. You're okay. Sorry, I was off the screen, so I didn't see you nodding. But
I don't know if
Ber-
you're talking to me.
yeah, who else are we talking to? You're the
The
only one here.
fans, you got the fans.
Bro, I'm not looking at the chat right now. I have to check the chat after.
Okay, yes,
But
he owns that.
yes, Berkshire is owned by Warren Buffett, but if you look at what Berkshire Hathaway was before he became the complete owner of it, it was a dying like textile company, which is like, what the heck's a textile company even in this day and age? Nobody knows him for that, right? I don't even think they do that anymore. But the point is, he became a majority owner and he just started making acquisitions with Berkshire Hathaway. Like Berkshire Hathaway, like when you see Geico save 15% or more on car insurance, Berkshire Hathaway owns all of Geico. So they own private companies such as like the insurance company Geico. Then they also own like massive ownership in Coca-Cola. But the point is, Warren Buffett was directing the investments of the capital. So some are speculating now that Ryan Cohen's going to start directing GameStop's capital towards investments to make it kind of like a next gen Berkshire Hathaway. Will it be that black and white? I'm not sure because it doesn't exactly line up with how GameStop is. Or let me rephrase that. There's still more we need to see before we really know what this means. Because maybe this just means investment activity pertaining to growing the company, investing in other gaming platforms, buying out some kind of software company, or even people have speculated on such as Newegg. I don't know if you're familiar with them, like being bought
No.
out. It's like computer parts and stuff like that. But it would give him the direction to do that. So some are speculating that ultimately, in the long term, his goal is he's going to start buying up other public securities. Like maybe he's like, hey, Apple's undervalued. GameStop's going to start buying some shares of Apple, and then within on its balance sheet, it would have like marketable securities on an additional line, like, and the value would fluctuate obviously because Apple stock would fluctuate. And the reason I say Apple is because Ryan Cohen is an Apple investor outside of GameStop. So this is a unique development or something that just kind of came out of nowhere, and it definitely has led to some speculation. What actually happens, we'll have to see. But I think it just adds another layer to, or I guess layer of interestingness. I don't know if that's a word, but just another area to speculate on in terms of the company and in terms of where they're going in the long term. But I find it interesting. I don't know if you have any thoughts on that, or you're just like, yeah,
Just taking it all in.
yeah, no, you're good, you're good. But this is also something like if you were just look on like Yahoo Finance, like GameStop, it's not going to pop up, right? Like it's not really going to be talked about. And again, it's a unique investment opportunity. It's going to take execution. And I think it's just wildly misunderstood. People think, oh, you're just, you're just bag holding. You're just holding on for a dream, right? And just a miracle that's never going to come. And I'm like, no, I just like the company. And I think it's an incredibly unique story. And I'm going to let it ride. Like, I'm not in a rush to do anything. In the beginning, did I think it was exactly going to play out this way? No, I don't think anybody did. I don't think anybody truly knew what it would grow into and how it's going. But we'll see, right? It's going to keep developing. It's going to just keep unfolding. And we have the holiday season coming up. And, I do encourage you. I mean, I'll make sure you do this if we are going to continue to stream together, to start reading these reports. Like, you can read these reports about any company, and it just tells you so much more as to what's happening with them. And everyone's a little bit different, but they all follow generally the same thing. They all do something called GAAP accounting, which is just standing for generally accepted accounting principles. So that when you are reading this financial document in comparison to Pepsi's, at least they're both following the generally accepted accounting principles. While there might be some little details different, but you can always have it accounted for in the same way. Like the accounting is the same, but that's
Right. Yeah.
something to get into more down the line. But let's hit the chat real quick. We also talk about some investment possibilities with that $1 billion in hand, because not gonna lie, these charts look prime for a big run if the fundamentals can align. Yeah, kind of what we just touched on, but it becomes, what are they going to invest in? I feel like eventually they'll repurchase their own shares because that pushes the price higher. But at this, just the same way they're not jumping to do that right now, I don't think they're jumping to make any investment unless the right opportunity arises. And that's just how I see it. Some people are like, oh, they should do this, they should do that. And there's lots of different perspectives, of course. But I think you want to wait for the right opportunity, because right now, also, Zach, like the big advantage for GameStop, I would say, is the strong balance sheet. What gives them this opportunity to do a turnaround and to evolve is that they have a strong balance sheet. So because they have this cash on hand, think about it. They're earning 5+% on their excess cash. Well, that's not doesn't sound like that much on 1.2 billion. That's pretty significant. So they're at least getting some extra cash from that. And it's twofold, because on the other side of the coin, they only have 20 million in debt. And that $20 million in debt is just one small loan associated with the French government's response to the pandemic. And that small loan is 20 million relative to 1.2 billion. Imagine it was a flip scenario, or even just a scenario where the company had 700 million in debt and 300 million in cash. Even if they used all their cash to pay off the debt, they would still have 400 million in debt. And let's say they're losing money, then you have to go take on a loan, because there's only two ways to raise capital for stocks. When you're a publicly trading company, you either issue debt or you issue shares. If you issue shares, you can look at AMC and you'll see what happens. The price falls. If you issue debt, you want to earn more on the debt. So if you're paying right now in this high interest rate environment, and GameStop's considered like moderate risk or a higher risk type of company to loan money to, a bank is probably going to loan the money at 8 or 9%. So then GameStop would have to be using that money loaned to them and earn 10% plus just to out earn the interest they're paying on the debt. Does that make sense?
Yeah. So it's worthwhile. Yeah.
Exactly. But that's extremely difficult to do when you're turning around, right? Because if to grow your revenue 10%, if you need to take on the debt anyway, unless there's a particular project you're using it for, and in GameStop scenario, there's not, you would be just hanging on for dear life taking on debt. And that's what a lot of these other companies that's going on with them right now, that or a lot of other companies that are kind of teetering on the edge of profitability because it's being priced in, like their stocks are falling because it's being priced in that they'll have to take on debt and they'll have to take it on at a high interest rate. In GameStop scenario, they don't because they have an iron balance sheet. It gives them the opportunity to take their time, seek the right opportunities, focus on things like cost cutting. Because if they lose a little bit of money, like this past quarter, they lost $3 million. They don't have to run to take on debt from the bank at an extremely high interest rate. And then I'll give you another example of just again, just for perspective on this. I'm going to pull it up. Give me a moment here. So another company I follow, right? Fortinet. I don't know if you're familiar with them. It's a cybersecurity company.
Yeah, I know them through you a little bit.
Okay, so you've heard of them. But let me show you something. I'm going to pull up their financial filing. Just a moment. Quarterly report, and then I'll switch it. Okay, can you see the tab that's playing now?
Yeah,
Let's see, perfect. So this is Fortinet's earnings. And when you look at their debt, right? Is the balance sheet going to be on here? I should have this pulled up before, and it's kind of hard to pull things up on the spot. It's something I got to improve on. But all right, hold on. Pull it up in a different tab, and then I'll switch it over. I'll show it on macro trends. But what I'm trying to show you is Fortinet never had debt, right? They never had debt, and I was boggled. I was like, why would they take on debt out of nowhere? So I'll share this screen with you. You see, all the time of the company, they've had zero debt. Like they never took on debt, right? And then all of a sudden, they took on almost $1 billion. Is it showing for you on the screen?
yeah,
Okay, so 0.987 billion, so just under 1 billion, like $987 million of debt. And now there's a little bit of interest slowly accumulating. They're almost at that $1 billion mark, right? And I was mind boggled. I was like, why would a company who's never taken on debt choose to take on debt now? And then I looked a little bit deeper at the financial filing, and if I had it pulled up beforehand, it'd be easier to show. But pretty much what they did was they boosted their balance sheet prior to interest rates rising. This debt they took on is at a 1%, 1 to 2% interest rate, which is incredibly low. Where if you look at their cash on hand, look how it significantly went up when they took on that debt right here. So I believe back here they made an acquisition. I forget the specifics of it, but you see the cash went down a little, the cash pile, but then the cash pile went higher again. And they are profitable, so that is also a factor. But my point being here, they management for Fortinet was able to foresee interest rates rising. Because if I pull up in another tab here, interest rate curve. But management was able to foresee interest rates rising. So they chose to take on debt because they have a strong business model that's consistently profitable. So they knew they would get a good interest rate from the bank. So they got that 1 or 2% interest rate. And now they can turn around and earn 5+% on their cash on hand. So think about that. They're literally earning more on their cash than the amount of interest they're paying on their debt. So that's like why I bring this up is it's an example of smart decision making by the company. Does that make sense?
yep, makes a lot of sense. They kind of predicted what was going to happen, and they took advantage of it. They just borrowed a ton of money at low interest rates, then it went up. So
Exactly. And in Fortnite's case, all they have to do theoretically is earn more than, let's say, just for the sake of the example, because I think it was like 1 point something the interest rate. It's 2% interest. If they're using that money to invest in new equipment, research and development in their cybersecurity technology, as long as it's yielding more than 2%, it's worthwhile for them. And even when they're not doing that right now, they can earn a ton of interest in cash and government securities because we're in a high interest rate environment. So companies that were taking on debt prior to interest rates beginning to rise, are much more at an advantage than those that are forced to take on debt. Now, obviously, it's very situational, but the reason I bring up this example with Fortinet is because I followed them for a while and I was like, oh, they've literally never had long term debt. Why would they suddenly take it on? They strategically chose to take it on at that time. So I just found that interesting. That also it makes me think, like in the future, if we have 0% interest rates again, I just take a personal loan. Like I think, like, damn, I would have been a genius if I took a personal loan at the same time they took that loan. Imagine I got a personal loan at 2.5, 3%. I don't know the details about getting a personal loan if that would be as simple as a business getting a loan, because obviously it's way different logistically. But in hindsight, and obviously hindsight is what I say, hindsight is key or hindsight is whatever. But point is, like, looking back, I can be like, oh yeah, I should have did that. I would have been a genius. But it's not that simple. And that's also part of what we're going to try and do, right? Just continue to improve and build wealth. And I'm going to show you Pepsi as well because it's pretty clearly laid out in terms of their debt taken out. Next time I got to just have a million tabs ready to go because it's so hard to pull it up on the fly. I'm trying to keep an eye on everything, keeping sure everything's rocking and rolling.
Yeah, you're usually the kind of guy who's got like 50 tabs open. I'm surprised.
Yeah, no, I'm a we're the two opposites. You're like the one tab guy, one or two tabs open, that's it. I'm like a gazillion tabs, a gazillion programs are open,
Gotta
you
keep
name
it clean.
it. But you see what's up here now, like on the
Yeah.
screen? So this is Pepsi's filing, right? These are all the different notes they've issued, right? Like senior notes due 2026, senior notes due 27, 28, and so on. But look at the interest rates on all of it. What do you notice? Does anything stand out?
Pretty low.
Yeah, exactly. And it's all below the current Fed funds rate of what, like 5.25? I forget if it's like 5.25, but it's above 5%. So theoretically, they're earning more, and like in Pepsi's case, they have more debt than cash, but that's okay because they're due extremely far out and it's a different style of company, and that's a whole other conversation itself. But the point being is you don't really see them issuing debt right now at a high rate, and they're also able to get these favorable rates because one, the federal funds rate was low, and two, they have a long-standing business model that's consistently worked. So that's all just perspective. It's really just for perspective about interest rates and what it means, why it matters. And interest rates very much affect things because when you look at markets as a whole, right now, the commentary from the Fed, like the Federal Reserve, saying it has a lot to do with, like, their commentary has a lot to do with the market's reactions. They're saying now to expect, and the market's always forward looking, right? So they're saying expect rate cuts in 2024. So that would mean the interest rates are going to go down. So while it's more beneficial to somebody that's going to borrow money, as an investor, that's bullish because what interest rates are, right? You remember you hear about like the risk-free rate in school at all?
Doesn't ring a bell, no.
So risk-free rate is like your guaranteed amount you can earn. Like the risk-free rate is what you can put in a government security or just a high yield savings account, a money market account in Fidelity, and you're going to get it right. It's not at risk in any way. It's just a cash equivalent. It's just some form of cash. So that's your risk-free rate. With the stock market, the S&P historically returns 7 to 8% on average. With interest rates 5% right now, what it's boils down to, it's like, okay, if the average investor was thinking about it, they would think, why would I take risk in the stock market where you don't know what's going to happen in the short term? In the long term, I'm going to earn an average of 7 to 8%. But in the short term, anything could happen. So maybe I'm better off just taking a lock in at 5% interest. That's pretty close to 7 or 8 anyway. Whereas when interest rates were only like 1% or 0% for a long time, everyone was like, why would I keep cash? I might as well go get 7 or 8% of the stock market and take my chances. If I leave my cash idle, it's not going to go up in value anyway. So that's kind of how interest rates affect the market as a whole. So interest rates, there's so many moving parts surrounding it. Like it has to do with the debt being taken out, it has to do with how the market's reacting. And I said the market's very forward looking. It's now the market's like, oh, there's going to be rate cuts in 2024. That's bullish. So the price is starting to go up. But guess what? If 2024 comes, there's a Fed meeting, like, hey, actually, inflation's coming back. And that's also how you lower inflation, you raise rates. So, like, inflation's coming back. Hey, we're not actually going to cut rates anymore. The market might start to come down a little bit because it was pricing in rate cuts, which are bullish. Does that all make sense? Like in terms of like stock market psychology? I mean, it's all a learning curve. You know, you're definitely newer than I am, and by no means am I saying, "Oh yeah, like listen to me, I know it all. I have all the answers." I'm just trying to give you like perspective and just teach you what I know and just help it for a future. You know, we can bounce these convos back and forth, and you'll soon be saying to me, "Oh, do you see what the Fed said today?" And that'll like topic of conversation, and we'll go from there.
Oh, yeah, generally makes a lot of sense.
Yeah, and isn't it crazy? It's like how I just explained it. You won't even learn that in school. It's crazy. It's mind-boggling, right? Like, and I learned that on my own. I didn't learn that from college. I didn't sit in a classroom and have that explained. Explain the risk-free rate. I didn't understand the importance of it. Like, I heard these things, but I didn't understand like how to actually use them to analyze things in real time. And when I got out of school, that's what frustrated me. Like, I learned all this, but like I don't even know how to apply it. I have to learn that as well. So it's just we both feel the same about school. So I'm
Yeah,
gonna
I
have
mean,
to go
I'm
into
still
that too
going through the
much.
motions, but
Yeah, you're literally still riding through it,
there's
so
plenty of stuff that you can learn for free on YouTube. That's
yeah.
very valuable information, so
And you know what's crazy? I swear I said that to mom and dad in high school, and when I was in high school, it was still like 2017, 2018. So, I mean, I know that wasn't that long ago, but I'm just saying I know much more now, and our perspectives are, you know, a lot has happened between now and then, obviously. But my point being, I even at that time was like, wait, I could just learn this all online. I can learn everything I want to know online. But it was just that barrier to entry where a company's not even going to read my resume if they don't see college degree on there, right? Like that's all it really is for your resume. I mean, granted, you know, everyone has a different experience. I was a commuter, you know, it was a lot of my college was during the pandemic, so that's part of it. But it really is becoming more and more prevalent that you can just learn things online, and the disconnect is the resume. Like, how can you prove you truly know it? But I feel like if I said, yes, I know this, I'm aware of this, I understand this concept, whatever, however you could spell it out or exemplify it to said company that's trying to hire you, I feel like more and more now they're warming to the idea of a college degree not being necessary. And it's
yeah,
interesting.
yeah,
It's
if you're
interesting.
able to prove it that you know the stuff necessary for the job, and,
Hmm.
then I think you're really good for the most part. In that sense, they might still look for the degree, but it's also the fact that more and more people are getting it, so it's just what's it really worth now that so many people
It's a
are
good
getting
point.
it?
Yeah, and also we were talking about this the other day a little bit too, where it's interesting how trades are coming back more and more, right? Like I think I was saying to you like literally just before how electricians, plumbers are becoming and just handyman are becoming more and more in high demand because I just feel like there's a lot of people our age that are generally lazy. Is everybody? No, not necessarily. But I feel like it's just becoming more and more how do I put this? The opportunity, like if you're going to trade school, is becoming greater and greater. Whereas I don't know if it was like this for you when you were going through the end of high school. It was like, oh no, don't go to trade school. You got to go to college. Like it was very like discouraged. Like it was almost like frowned upon, or just like, oh, you don't want
Yeah,
to do that, or like, oh,
yeah,
the
I
goal
feel like
college. Whereas
yeah,
if you went to trade school, you're committed, you learn that trade, you become really good at it, and you go down the path to create your own business, you have a great opportunity right now because there's generally, I feel like, less supply now, right? That I'm done with school and I'm where I'm at now. I'm seeing different things take place in the world over the past few years. It's easy to say it now, right? But the world's always spinning. And, you know, a quote that stuck with me, I've said this on the stream in the past, but I'll say it again, is a kid in one of my classes, really smart kid. And you know when someone's so smart that they're like almost weird? Like he was like nerdy and weird, but I'm not saying this like in an offensive way where you can like you know when someone's so like they're not a good communicator or Like, I got along with the kid good, like, I thought he was a super nice guy, I don't know how to put this exactly, but
Yeah, I think
do you know
that's
what
the
I'm
case.
saying?
Yeah, with a lot of, like, really, really intelligent people, they might not be the best at communicating their thoughts and everything, but you can just tell that they really know their stuff.
Yes, exactly, and he said something that stuck with me, and he said it, like, when he was it was, like, a pretty open class, like, open discussions, he's like, "Money literally makes the world go round," and I thought, "What? Nah, the world just spins, it's science." But no, money literally makes the world go round, because if you think about it, every single day, median of exchange is money. People are buying something, people are selling something, people are sending money to a family, their friends, right? Like, there's always money moving. Money literally makes the world go round. If there was no money, what would happen day to day, right? Like, it sounds a little dramatic, but it's also kind of true, where it's like money literally makes the world go round.
It's
And that's
true.
where I think owning assets and wealth building is becoming more and more important, because and that's why I have Bitcoin on the screen here, where I kind of want to transition it, where you don't have to necessarily like Bitcoin, but I think owning assets is becoming more and more important, because the US dollar is constantly printed, right? And with the dollar being printed, and we say this all the time. Money is not even real. Money is literally fake, right? It's literally fake when you think about it. And people go, "What the heck?" No. But it's just being created from thin air. Like, money is literally fake. It's being created from thin air all the time. So, not to say like you should never have any cash in your pocket, because we just talked about interest rates, how you want to have some cash on hand. But my point is, you have to understand the importance of owning assets. And that's something I want to make this channel really a mission of. And ideally, cash yielding assets, right? Like in the future, doing real estate and renting it out, that's cash producing asset, right? And then also, ideally, the real estate value goes up as well. And then, that guy, Robert Kiyosaki, that's always like, uh, debt, rich dad, poor dad, or he's like,
Yeah.
they don't buy with cash, they buy with debt. Like, he's all dramatic and shit. But like, he's right in a way where when you get to the point and you have a bunch of stocks, you have some real estate, and you start your building, you don't just take some of your cash, you take on debt at a favorable interest rate, and you earn more than that interest rate on the debt. You earn a greater yield on whatever you're going to invest it in. But that's where you have to be an intelligent investor and make those proper decisions and carefully make those decisions. And that's ultimately what I want to do in the long term. Just be a investment individual or portfolio manager, individual investor, whatever you want to call it, where I want to have some real estate properties. I want to have my Bitcoin. I want to have my few stocks that I like. I'm gonna have the S&P as a 500 as a whole. Maybe we'll even have some gold one day, and then seek to maybe build businesses and just income producing assets. Like, to me, it's really about building wealth. And while GameStop right now, some might be say, well, that doesn't quite line up with what you just said. For me, as I mentioned before, GameStop is a truly unique investment opportunity. And I'm fully accepted. Like, if it doesn't work out, like, I will be okay. And let me be perfectly clear. I'm not saying like, oh, I'm bearish all of a sudden or something. Like, I absolutely believe in the company, but I've put myself in a spot where no matter what happens with any one investment of mine, like if Bitcoin went to zero tomorrow, GameStop went to zero tomorrow, you took all my cash out of my high yield savings, I would still have other assets, right? Like, so you want to have various assets. And then I think ultimately you want to have some cash producing assets. And I'm saying all this and it sounds fine and dandy, but just like GameStop executing, it's the same for me. I have to actually execute on these things. And that's why I want to do this channel. I want to have these conversations with you where we can do it in real time for people, showing, the struggles, the successes, the ups, the downs, what's working, what's not working, what's part of the journey, what's going to be more part of the journey, all these different things. But that's where my head's at with everything, where I feel like assets are becoming just so incredibly important in a world where the money's just printed.
Yeah, I agree completely. I mean, it's just super important to accumulate assets that are gonna generate you more income because it's just a smart way of spending your money. You really wanna stay away from spending your money on dumb things like or liabilities that are gonna take money out of your pocket rather than put it in your pocket. So you wanna
Absolutely.
accumulate assets that are gonna get you money. You don't want your money to be sitting still all the time. You want to make smart decisions,
Mhm.
invest in things that are gonna give you a return. So think
Yeah.
it's yeah, what you said, completely agree.
Yeah, exact and just bounce off what you said, where it's smart decisions. That's the key. It's not just, oh, invest in a bunch of things and just hope it works out. Like I feel like that's what a lot of people our age think, because we see a lot of, obviously we have friends and we talk to people where wouldn't you agree that it's like there's like this stigma kind of people our age. They just think like, oh, investing, like I couldn't do that, or like, oh, that's I'm a long way from that before I start even thinking about doing that. Like they're either worried about college, they're saving up for some stupid trip, or I mean, not say I'm literally about saving up for a trip right now as I'm saying that, but you know what I mean. Where I feel like there's this like stigma around investing for young individuals right now where they just think like, "Oh yeah, like I'll figure out my 401k one day," or "Oh yeah, I'll start looking into the stocks," or "Ah yeah, Bitcoin, I think it's going to be good, but yeah, I'm not interested in it right now." Like very like putting it off mentality, whereas starting young is like the biggest advantage we have, and I feel like we're very blessed to understand that at this young age. Like would you agree there's like this stigma?
Oh yeah, 100% agree. Yeah, you so important to understand this stuff now because the earlier you invest, the better. And I feel like also a lot of people like around our age, they kind of lack some kind of discipline because some people you mentioned that they might like, "Oh, I don't wanna put money into stocks, I'm not ready." But there's also a lot that they're just like, "Oh, let me just throw some into some stock here or there," but they don't do their due diligence or they don't, like, take the time and have the discipline to look into these stocks to know whether this is a good investment or not. Like, you do read the balance sheet, really get to understand the company and know what they're doing, so I think that's definitely an element as well.
Yeah, absolutely. That's a very, very good point where there's two types of people. Those that are like, I want to make the right decisions, but scared to. I don't want to get my feet wet yet. No, no, no. Then
Yeah,
there's other
yeah,
people
not
like, oh,
doing
a little
anything
here,
is
a little
just as
there. A
bad.
little.
Yeah.
Yeah, exactly. And it's about that happy medium where you're not rushing into too much, but you're not putting it off. You're still actively pursuing it, right? Like, even if it's small, like you can buy dollar amounts now, right? Like, you can theoretically put in $10 every time you get paid into a brokerage account and buy $10 of Pepsi stock. Even though one share of Pepsi is like $180 or whatever it is right now, you're just going to buy $10 worth at that moment in time. And it's just going to keep accumulating and accumulating and accumulating. And also, I really feel like that is a key with investing, consistent investing, not just going all in at once or just selling all it out at once. I mean, obviously you got to do what's best for you, and every scenario is a little bit different. But I think getting involved in an investment, and GameStop's definitely like allowed me to see this in real time of what it's like to just continue to average down. Not that I haven't ever done it before, but to really believe in something for the long term and start to have that perspective where when it goes lower, oh, great, I have an opportunity to buy more. And then it starts going up, and you're almost like, dang, I kind of wanted to go down to buy more. But at the same time, obviously, you believe in it, so you want it to go up. So you put yourself in a mindset where it's positive either way. But at the same time, that doesn't mean like just put the blinders on and just hope for the best. You have to analyze what's coming in front of you. But if what you believe in is still fundamentally the same, I think that's the best perspective to have where it's going up. You're like, okay, I believe in this. I like that. But then when it goes down, you're like, okay, well, I'm thankful to have this opportunity to buy more at a lower price because I believe in this for XYZ reasons. So that's kind of my perspective there. And then with Bitcoin, I think it's really just a matter of dollar supply versus Bitcoin supply. And I'm going to show you, I'll put on the chart on the screen in a minute. And it seems like, we're finally breaking out of this low. And we'll see, right? We'll see because the Bitcoin halving is coming right around here. I think it's is it April or May of 2024? And historically, whenever there's been a Bitcoin halving, there's been a big run. Like I think there was a halving like right around here, so it was before this big run. But what are your overall thoughts on Bitcoin? I know you're pretty interested in it, but you're also kind of like, yeah. Like, what's your thoughts on that?
I think Bitcoin, I'm generally in favor of it, even though there was a whole thing, the FTX and the crash, and there's a lot of weird things
Distrust.
that went on. Yeah, distrust with it. But I think in the long term, it's actually a good thing. It's a good investment. I mean, mostly for the simple fact that it's a finite amount and that the value of it's gonna keep increasing. So definitely like it for that reason mostly, but, long term, I believe in it. I think it's good.
Yeah, no, I mean, me too. But it's not for everyone. Like, I understand some people like, oh, it's like magic. Like, my one friend calls it like magic internet money or something like that. But he's like just joking around with it, or whatever. But it's like I get it because also from the outside looking in, you had a period of time in 2021 where it was the absolute wild west, and you had pictures of monkeys going for $1 gazillion and all kinds of bizarre stuff where I feel like NFTs are still here to stay. I know, but everyone's like, oh, NFT, oh my God, those are dead, oh, bad, 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 bad. Whereas what an NFT is really just a digital asset and it's publicly available on the blockchain and basically just allows true ownership of your assets. So I think where gaming it can go with gaming is when you own assets in game, right? Think about it, we play League of Legends. Imagine Riot just banned you because you're always talking shit in the chat. They just ban you out of nowhere for life. You would lose all your skins that you bought, right? Or that you've had from like when we played a long time ago. You would lose all your skins. But if your skins were in the form of an NFT on the blockchain, theoretically, right? And then it was in a wallet. Theoretically, if your account got banned, you could just create a new account and then bring them there. And then if your IP got banned, like you can't play the game at all, at least you could sell those skins to other individuals on the secondary market. And how Riot would still be able to take advantage theoretically is they would then get like a fraction of every transaction on the secondary market. So while the primary market won't be as hot because people just buy it off someone else for cheaper instead of buying the new one, they would be getting a fraction of every single transaction. And if you could sell skin to buy a different one, wouldn't you you'd probably have done that like a bunch of times by now, right? And then that transact it also is allowing true ownership while the transactions taking place are allowing the company to still make money, if that kind of makes sense. But I want to show you the total debt outstanding. Pull up my notes. Yeah, I think this StreamYard thing might be worth sticking with. Eventually, maybe we'll get the premium and get rid of the powered by StreamYard on the top. Then let's get back to the screen. So yeah, I mean, I think Bitcoin's going to go up more in 2024. To be honest, really think it's going to have a strong 2024. But again, I'm a long-term investor for it, so I'm just enjoying the ride. And also, the big thing going on right now, I don't know if you're familiar with it, is the spot ETF is pending approval for Bitcoin. Are you familiar with that at all? Where they're trying to create like an ETF for Bitcoin?
No.
So pretty much, BlackRock is trying to create one, and when they get involved in things, that's pretty good telltale sign, excuse me, in my opinion, that it's here to stay because BlackRock is one of the biggest money managers in the world. And, that's a whole rabbit hole in itself if we want to start talking about that. But huge amounts of money invested each year. But imagine you have money in an IRA and you want to buy Bitcoin. You maybe weren't going to do it before because you're not going to go out of your way to buy it. But if it's just, oh, in my retirement account, I can just buy the Bitcoin ETF that's just going to move with the price of Bitcoin. People can start putting their retirement funds in it. And when people put their retirement funds in it, the ETF, when money's invested into an ETF, whoever's managing that ETF, exchange traded fund, turns around and puts that money into whatever it represents. So if you have an ETF that represents the S&P 500, right? When I'm investing into SPY, that's an ETF, that's if I invest into it, they turn around, take my money, and put it into the actual 500 stocks that are the S&P 500. Like that's what's actually taking place with an ETF. And it's the same with Bitcoin. If it's a strictly Bitcoin ETF, every time they have cash inflow from people buying the ETF, they're going to turn around and buy Bitcoin. But theoretically, the other side of the coin is if everyone starts selling it, then they would have to be selling it because they're losing assets under management. So I guess theoretically it could make it more volatile, but I think it just opens it up to more people and it also validates it to more people if it becomes more available by major institutions. Though some argue that it's like the wolf in the hen house type of thing if BlackRock's involved, if that makes sense, or it's a wolf in the sheep den, or I don't know what the expression is. But let me pull up the debt by day. Like this will blow your mind when I show you this, I think.
Real quick, I just read the chat. by
Yeah.
Fresh
Oh yeah. I've been
Baker.
meaning to do that. Good looks.
Yeah, Fresh Baker is asking me if I own any GameStop shares. I do own some GameStop, but this guy tells me every single day, buy more, buy more, buy more.
Whoa,
Every
not a
day.
financial advisor. Not a
Not
financial advisor.
not a financial advisor, but I hear it all the time. So
I say check
the
it out. It's a good company.
yeah,
But also keep in mind, guys, this is my brother, so things are a little different, but
yeah, it's a different dynamic, but
different
yeah,
dynamic. We tell each other to do
just
shit
goes
all
to
the
show
time.
his passion for it.
Yeah, I just tell him like, yo, look at it. It's gonna be crazy. I just say, I'm like, imagine I talk about it all this time and all these different things I tell you about it, and then one day you look back and you're like, fuck, I didn't do it. You're gonna feel pretty silly. That's all I'm saying. That's all I'm saying. But that's also because you see me all the time. It's a little different scenario.
Yeah,
But of course, even you, just so do this, no, do that. Like we just talk shit to each other. You still make your own individual decisions, right? Because of course, no financial advice. I would never give that. It's not the business I'm in. But okay, I finally got it here. Let's pull it up on the screen. Share this. Is it on the screen or do I gotta switch it back?
it's on the
Okay.
screen.
So total public debt. Look how you see in 2020 when it just jumped. That was the pandemic. So they just took on a massive amount of debt, or just the stimulus checks, and obviously it was a crazy time. I'm not saying it could have been completely avoided. But when something like 2020 happens, right, that's when you're supposed to print money. But look at what was happening all the time through 2010 through 2020, where things were overall generally pretty smooth, right? We were just printing money anyway. And, people try and make it a political thing sometimes, like, oh, the left did it. Oh, the right did it. Every president, the debt's pretty much been going up. It's not even because also the Fed is supposed to be like unpolitical. You can think what you want about that. That's a whole conversation itself. But the point is, it's just become the normal where the amount of debt outstanding just is ever increasing, which I just find mind-boggling because when you look at it by day, where is it? National accounts. I gotta find it. Pull it up on the screen, then I'll switch to the tab. Okay, yeah, this is where it's reported daily. The debt. This is what boggles my mind. Debt to penny. So look, record date. This is as of Friday, so it doesn't happen over the weekend, but well, they actually just changed it. Total public debt outstanding. Look how it's going up every single day. 33.8, 33.84, 33.82. Or it fluctuates a little, but you have to really zoom it out. This isn't the best way to present it, but you can just see, like, if I start from down here, 100 days ago, because it shows 100 results, it was 32.6. Now, just in that time, it's 33.8. So our total debt outstanding has went up over $1.2 billion in just the past 100 days. And look at the curve I just showed you. It's becoming more and more exponential rather than linear. So, with a higher interest rate environment, you have to also think, how are they paying off all this debt? They're just issuing new debt to pay off old debt. And when the new debt is being issued at a 5+% interest rate, you're just increasing the size of the snowball even faster. And it's kind of a spiral with no way out because what's the solution? Like, there's no clear solution because if you cut rates, right, which would theoretically decrease the amount of debt outstanding increasing, right? If that makes sense. Like, it wouldn't be increasing as rapidly because rates would be lower. But then you could have inflation roar back. And then what do? You have to raise rates. So it's like an endless conundrum. I got to show you, there's this guy, Peruvian Bull. I know chat's definitely familiar with him. He talks a lot about this. He calls it the dollar end game, where essentially it's a conundrum that there's no escape from, where once you're past the point of no return, it's just a balancing act of trying to make sure, oh, not too much inflation, oh, not too much interest, too high of interest rates. And it's scary to think, but it's like we're digging ourselves as a country. And I also have viewers from outside the US, so shout out to you. But this is happening in a lot of different countries, not just the US. It's with the euro, it's with other currencies as well. And why it's all happening is because for so long the dollar has been the world reserve currency. And how this was prevented in the first place. Do you know when you heard about how the dollar used to be on the gold standard? Does that ring a bell at all?
Yep, yep.
Yeah, so it used to be the dollar, like the Fed couldn't just create money. It had to create it based on the amount of gold in the Federal Reserve. So that whenever there was a crisis, it's like, oh, well, my dollar's actually worth this much gold. So it kind of created like a bottom for its value. But when we went off the gold standard, this was 50 plus years ago. Low key, in my opinion, that was the worst decision in American history. And I think it's going to lead
That's
to
when
some huge
money
problems.
became not real.
Exactly. At that point, money became, it's literally not even real. And some people say, "Oh, I don't understand." Like, we talked about this between me and you like a million times where like they don't get it or people don't understand what that means like, "Oh, money is fake." It is because it's truly not backed by anything. And that's also where, my friend that calls it magic internet money says it's magic internet money. It's fake. I'm like, "Yeah, but so is the US dollar." And at least with Bitcoin, I know there's a finite supply of it and not it endlessly being printed. So, it kind of just is tying everything together here. But the by day, I'll show you that again. If you look back even farther, because now these are the 100 days before that, look how fast it's going up. So, see, just 300 days ago, the debt was 31.1. Then it went to within 100 days, 31.4. And then it went over the next 100 days from 31.4 billion, sorry, trillion to 32.6. And now we've gone from 32.6 to 33.8. So it obviously remains to be seen what continues to happen with interest rates and how everything just plays out. But one thing that doesn't really seem that uncertain is the total public debt outstanding just continuing to rise. Like, and it's just concerning because it's like, what's the solution? And that's where some say Bitcoin because of the freedom it provides, as well as just the finite amount that's existing. But then let me show you the next piece here. So this, what you're looking at, is total public debt as a percentage of gross domestic product. So gross domestic product is total amount made for the country as a whole. And then you had to compare that to the amount of debt outstanding. We passed the point of no return during the pandemic. We were already teetering on the edge. See, it was already 199, then it was 101, 102, 103. And then boom, we jumped to 132% of debt compared to GDP. Granted, GDP did also fall in 2020 or wasn't as strong because obviously when you put the whole economy on hold, things aren't going to be as strong. Right? It's just plain and simple. But look, it started to decline a little bit, but now we're kind of flatlining here in the 120s. So we're in a situation where debt to GDP is like 120%. And with a higher interest rate, that's just going to snowball greater and greater and greater. And an example of kind of difficulties that come with this is the Bank of Japan. Do you know, or Japan as a whole, you know what their debt to GDP is? It's like 300% or something insane like that. Roughly. Maybe it's two something, maybe it's 300 something. I think it's actually 300 something. But guess what their interest rates are right now? Negative. You lose money for having money in a money market account. Imagine we have that. Then it's like just invest, 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 invest. And where does money flow when you invest, invest, invest? Assets. Crazy, right? Isn't it mind boggling when you think of all this? But then you think, oh, well, if there was a recession, asset values would fall. But at the same time, if money's just being printed and money's fake, I got to own some assets. And that's where I feel like owning income producing assets is becoming more and more important because if you have an asset that's producing money, who cares if money's fake or what the fluctuations are? At least you have something that's becoming worth more in the longer term and it's providing you cash flow throughout. And again, that goes back to what we said before, where that's not just anything. You have to specifically pick good investments. And obviously that's not easy. That takes work and time. But that's the thing too, we're to circle back to another point we had before where a lot of our people our age don't want to do it. Or they just, oh yeah, I put a few bucks in here, I put a few bucks in there. Why? Everyone's talking about it. It's probably good. And then you have the other side of the coin where it's like, oh no, 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 I don't know anything about investing. Oh, I couldn't do that. Or oh, I don't, I'm
Oh,
gonna
too
lose money.
risky.
Like I'm scared.
Yeah.
What is it?
I said, oh, it's too risky, too risky.
Yeah, exactly. It's like, then learn, read, so it's not risky. Like, you know what I mean? Like, people just write it off so quick, or they just jump in so quick. Like, it boggles my mind that so many people our age are like that, and I feel like very few are like me and you in the sense where like, okay, it's you got to do it because if you just don't, you're just making things more difficult for yourself. You have to, if you want to grow your wealth and you want to grow over time and just accumulate money, accumulate wealth, build your future, whatever your goals are, you got to put in the time and effort to do it. But at the same time, you can't ignore it. You can't just jump in it too fast. And another point I'll make is I think a huge advantage we have, and you even more than me because you're younger than me, is, and I've already had this advantage though. When did you see me? Like, do you remember when I first opened my first brokerage account?
Definitely a long time ago, probably when you're in high school.
Yeah, I was a freshman in high school, and they were trying to explain to my mom. She's like, "Yeah, I don't know. He's gonna do it." So she just came with me to be like the second person on the account, and it was Scott Trade. They don't even exist anymore. It got bought out by TD Ameritrade. TD Ameritrade's now owned by Schwab. So that's another thing. That's a whole conversation itself. The banks just keep merging and become bigger and bigger. The financial institutions become bigger and bigger and bigger until you have like an oligopoly, with just few very large institutions. And that's where people also say, with the banks, there's less and less banks over time because every time a bank doesn't do the right things, they get bailed out by the Fed, which also creates more money, like 2008 bailouts. Even Silicon Bank, you heard about last year, bailouts. So you have to create money. And who benefits? JP Morgan made money from, I think it was Synchrony Bank went bankrupt. They get bailed out by the Fed. I'm also speaking, very general terms. There's like more specifics to it. They get bailed out by the Fed, and then they make a one-time profit for absorbing it and making themselves bigger. It's like, how is that? What? Like, it's crazy. It's all. I'm going on a complete tangent here, but yeah, it's incredible, and that's also part of what we're doing. We're trying to open up the eyes of younger individuals that are closer to our age, where it's like, hey, you can do this. You can build wealth. It's not going to be easy. I'm not going to sit here and tell you like, ooh, just do one, two, three, XYZ, ABC, boom, ta-da, you're rich. It's not that simple. And I'm not gonna sit here like, I'm gonna teach you how to be rich. I'm not rich. I'm gonna show you my path and my journey to get there. You know what I mean? Like I feel like that's where we gotta kind of go. I'm going on a complete tangent, but any thoughts on all that or just taking it all in?
Taking it in, but, I mean, a lot of people so quick to say, "Oh, I wanna be rich, I wanna be rich," but they don't wanna put in the work. They're just lazy, like you said before. They just it takes the work. It's not easy. It's not like those videos, "Oh, get rich quick." It's not gonna happen. It's not like
Yeah,
that's not how
exactly.
it works. You have to put in the time and the effort, and yeah.
Yeah, and it's exactly why I don't sell anything. Like I don't have, like, I haven't provided value where I'm gonna sell something yet. Like I'm not at that point. I'm not saying I'm never gonna sell something in the future, but for right now, I'll take my like little tiny minuscule ad revenue from YouTube. Like I'll take what I can get, and I'm good with it. And I'm gonna grow. And I
Soon
really
to be
feel like,
more, though. Soon to be more
yeah, exactly,
as we
exactly.
grow.
And that's also the thing too. I don't want to charge people like a membership or whatever for the channel. Like I want to just grow. And if I grow, my ad revenue will grow. So, and how you can support me is just dropping a like, subscribing, and just following the channel. It's just keep it simple, stupid, right? That's what they say. So, but yeah, let's hit the chat because I apologize. I've been on a complete tangent. I mean, this is like my comeback stream. I haven't really, I did the earnings one, but I really want to get like settled back in and consistent again. But let's see, Ted Ross Demand, Wendy, hope you're doing well. Happy holidays. Jackson's, hope you're doing well. Yeah, everyone you see in the chat, OGs of the channel, Monster Buddy, hope you're doing well. Fill stockings with GameStop merchandise. I like that. I like that. Let's go. Cheers all around. Dropping knowledge. Yes, sir. But Noah's, that's why. Could this be the GameStop chart? One day, Fresh Maker. One day. If the market takes and Ryan buys Berkshire Air Apple at a fire sales price, I'm okay with that. Coffee, donuts, and Homer. Hope you're doing well. Yeah, exactly. It's like not something I initially foresaw, but it could happen. It could happen. TikTok, always have a truthful. Happy to see you. Hope you're doing well. Ken, hope you're doing good as well. So, how often does Noah talk about all this off stream? That's all you. You can answer that.
Literally all the time. It's all he talks about. Doesn't matter where we are. It could be friends, family. Doesn't matter. All the time. GameStop, GameStop, GameStop. Boom, boom. Never like you might think this is only here, but no, this is his whole life. It's whole life.
But
Yeah.
also, money too, and just
Of
wealth
course, it's
building.
not the
And
only thing he looks into, but I mean, I respect the fact that he goes this deep into it and then takes the time to really
and
understand it. It's not like he's just throwing his money in. He's just being smart and getting to understand and a company is really important when you're gonna invest in it, I feel like.
yeah, and for me, it's really been the ultimate lesson that it's like, wow, if I want to truly invest in something, this is what I have to do. And I think it makes sense to just really handpick, like maybe in the long term, 4 or 5 stocks that I really, really like that I'm going to compare to 15 or 20 other ones that I say no to. Pick the ones I really, really, really like and believe are ultimately going to outperform. And then any other money I want in stocks, I can put into the S&P 500. Just get that average 7 to 8% return. And then obviously, as I mentioned before, some other assets. Maybe one day I'll own a little bit of gold and silver, like some actual precious metals. But right now, I'm good where I'm at with Bitcoin, GameStop, S&P, high yield savings, taking advantage of the high yield interest environment we're in right now. And also, I'm in a spot where I need to have an emergency fund because that's the thing too with owning assets. You can't just put everything in assets. I think having an emergency fund is really good. And I look at it as where it's in a spot right now where it's like, hey, you can earn 4.5 to like 5% interest in a high yield savings account at a bank. If you have 1,000, 2,000, 3,000, whatever your emergency fund is, right? It's for an emergency, so it should be sitting idle. You might as well have it idle in an account that's going to accumulate interest. So I feel like just doing those small things. And what's crazy to me is there's also another thing that people our age don't even understand. They're like, you can earn money on your cash because we've grown up in a time period where interest rates were 0 to 1% for the longest periods of time. So when I tell people, like, yeah, you can earn like 5.5% right now with Marcus's promotion, Marcus by Goldman Sachs, the bank, it's an online based bank. You can earn it. Like, that sounds like a scam. I'm like, it's FDIC insured. It absolutely is real. Like, I understand why you speculate it to be a scam because we never lived in a world of interest rates environments. But then I explain interest rate environments, the interest rate environment we're in, and why the interest rate is what it is. And that allows the bank to pay 5% because they're turning around and loaning it out at 5 point whatever. And Marcus is just doing a promotion where you get a little bit more. Most online savings banks are 4.5 because you got to think about it. If they're paying you 4.5, they're taking your money, turning around and earning greater than that. And also, how banks work is they loan out your money again and again and again and again. And that's how we run into bailout situations because it's, in my honest, oh so humble opinion, poorly regulated. They put these stress tests in place and things like that after 2008 to make sure the banks are always in good financial standing. But then look what happened last year, or was it earlier this year? I don't know. It all blends together at this point with Silicon Valley, Synchrony Bank, a couple of these other names. How did that happen? Out of nowhere, right? It didn't happen out of nowhere. Somebody saw it, or it was just underreported. And oh, there's so many different topics we go into, Zach, with this. And it's also like with the interest rates rising, old treasury bills, right? Because when you buy a treasury bill from the government, you're giving them money, you're giving the government money, and they're paying you interest, right? So if you had a 1% treasury bill in your Bank of America and it's on your balance sheet, and it's a 10-year bill, its face value is like terrible right now because who would buy that for 1% interest rate? Nobody would buy that. So they can't dump it in the event of emergency. And that's kind of, I'm explaining it very, very roughly and simply, but that's part of what went into things that happened with like Silicon Valley Bank, like their assets under management become distressed. I mean, it's a whole conundrum, but that's a whole topic for a different day. Icon stock is cheap too. I grab a few shares here and there. Yeah, I haven't looked into it too much. I mean, it's definitely beat down quite a bit, and Icon's been doing it for a long time. So if you've done your DD, I absolutely wish you the best. Sooner or later, the short market makers have to lit up, especially with this GME balance sheet. Coffee, donuts, and Homer. I think you're absolutely right. And when that is, it's to be determined. And when you look at GameStop right now, overall, it's in a better spot than it was, past couple months. But again, it's all about the long term. And where it goes, how fast it goes is all to be determined. But one thing I will say is it's important to keep in mind, where we saw it come crashing down from June, pretty much in a straight downward spiral till about November, and then we've seen the reversal since just before last earnings. Thus far, obviously, again, we can see anything can happen in the short term. But my point here is anything that can move down this fast, it can move up just as fast. It's one of the first things my grandpa, or our grandpa, because he's your grandpa too, um, taught us, or well, he taught me. I don't know if he said it to you, but he's like, anything that can go up, because we were talking about the market, like, wow, the market's been hot, and this was like when I was in high school, so 2018 or something, or maybe it was 2017. The market was doing well, whatever it was, and I was like, "Well, yeah, it's like every day it's going up." He's like, "Yeah," and I was like, "Why is that bad?" He's like, "Yeah, if it could go up that fast, it could go down that fast just as quick." And I was like, "That makes sense." And I think it's the same with any individual stock or the market as a whole. And even when you look at the days during the pandemic, I don't know if you remember me mentioning it all, like the S&P 500, or you even knew this, the S&P 500 was moving like 7 or 8% a day in like March 2020 when nobody knew what the heck was going on. Everything just suddenly paused. I mean, obviously, it's the most uncertain time ever, and the market hates uncertainty, so it was extremely volatile. But the S&P moving 7 or 8 or 9, 10% in a single day, up or down, is just insanity. So it was like, dang. But any day you saw it go down that much, because there's initially like fears, like, oh my god, then good news would come out like, oh, well, we're going to do this to put in place. We're going to issue stimulus checks to everybody. The market went back up just as fast. So it's stocks and markets as a whole. I think, like, just from watching them over time now, and again, not saying I'm some kind of genius, saying generally speaking, it's very reactionary. And when something's harshly reactionary one way, once the tide turns, it's more than likely going to, or in my opinion, it's more than likely going to be harsh moving the other way because the tides have turned. If that does that make sense? Or
Makes sense, yeah.
yeah, so while it's been aggressively going down, 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 I think when things are working out for GameStop, as I personally believe they will, it's going to be going up, 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 and will it look exactly the same, just in like a complete reverse of the way down? No, but yeah, that's just where my head's at as a whole. See, would you buy long-term stocks at these valuations? Ryan, it depends, right? Like something like a Pepsi, I think, where its valuation isn't going to fluctuate very dramatically. I think it's one of those where it's just better to be consistent adding to it over time. Whereas, and if you're talking about like from an individual perspective, if you're talking about from GameStop's perspective, that's a tough call to make because the first move they do make in terms of investing in anything or making an acquisition is going to just draw a lot of attention. It'll really kind of set the tone. So I feel like that's a whole thing in itself. But I feel like with buying stocks for the long term, you want to consistently buy. So something else I've heard in the past where it's like you want to focus on time in the market rather than timing the market. And what that means is sometimes people are so worried about picking the perfect moment to get into investing or investing in a company or opportunity, whatever it is. You spend so much time speculating, you miss the ride up, or yeah, maybe it works out where you speculate, you get it in a lower price. But instead of thinking so hard about it, what you can do is you can just set consistent buys for like X amount of time or until it goes up to this certain price or anytime it's below this price, I'm going to be a consistent buyer. But I think it all, comes down to what's best for you and knowing yourself and knowing how you think as well. That's a big part of it. You have to be like in touch with yourself. If that's, if that makes sense. I don't know. But what was the last thing I wanted to show real quick? There's one more point I wanted to make here before I wrap it up. Because I mean, I feel like it's been a pretty good combo. Has this been productive for you, or makes sense, or where's your head at with it?
I think this has been a good combo. I mean, I've definitely learned a thing or two already just by talking to you, and I'm glad
Nice.
we can project that for everyone else as well.
Yeah, no, I like to hear that. And yeah, you're right. It's just about learning, doing more, getting smarter, just brick by brick, just like GameStop. And sometimes I'll say, when I'm streaming, I don't know if you've ever heard me say it, where I'm like, I'm just like GameStop in a sense where GameStop's building brick by brick, and so am I. And GameStop's evolving and becoming something great, and I'm trying to do the same type of thing. And just like how GameStop's going to have some ups and have some downs, I think this channel is going to be the same thing. For a while, it's kind of been like a down time here as of late, but just getting myself situated, and you're still seeing me day to day. I'm still like keeping an eye on what's going on and improving other aspects of my life, outside of the channel and whatnot. So yeah, I feel like it's a pretty good spot to leave it for today. Anything you want to talk about lastly, or final remarks? Anything?
No, I think that's about it.
Cool. Yeah, I think we'll have to do this again. I think, well, next Monday is Christmas, so that wouldn't really work. Maybe next Tuesday we could run this back. What do you think?
I'm down. I'm down.
All right,
We're
so I
definitely
think
gonna gotta try to work on other content too, and just keep on
mhm.
growing. And we want to share our journey, like you said, and just keep growing.
Yeah, maybe we can get some clips out of this. I know we're also talking about another like a sit down thing where like we're both on the same screen, kind of like a podcast format. Although I think the live went pretty good, but maybe we'll do some that are not, where we can do the podcast kind of thing where you get the different angles, the different cameras, like switching back and forth and whatnot. But appreciate all you guys. Like I really can't say it enough. Whether you're watching this back or you're watching this live, like I really appreciate every individual. Even though the channel's small right now, I really it means a lot to me that you spend some of your time, because I know everyone's time is so valuable, especially in a world and just look at this, look at that. Everything's flashing on the screen here and there, and every website and every social media. But yeah, it's a fun journey, and we should keep riding it out. Do some podcasts with other GME investors in the future. Yes, Ryan, I like that idea. I know a couple people have reached out to me and do want to do some collabs, and the past couple months have just been, like I said, kind of crazy. I'm still I'll be honest, it's excuses. It's excuses, right? There's always a way to make it happen, but I think yeah, it's time to start having some conversations. 'Cause I know there's some other people who do want to share things, and also hopefully doing this with Zach helps me improve. Then when we do have people on, we could ask some good questions, or whether it's myself interviewing them, it's both of us. We'll determine that as it kind of rides out. But just learning to converse better and just keep improving. But yeah, there's definitely a lot, other individuals will share, and then they'll say something that makes me think, and then I'll say something that makes them think, and it's just the idea of building up ideas. And Scott, shout out to you. I know you're one of them that messaged me a while back about wanting to come on to discuss stuff. So I got you. I'm keeping that up here. I don't know if you were here earlier, but this is Zach's, my brother. We're gonna start doing some more of these streams, start building things out, catch one of my live streams. It's all good, man. It's all good. I know I've been slacking. I haven't really been out there as much, doing as many streams. It's been, I was saying, a little bit of a crazy time. A lot going on with work and just outside of YouTube. But at the same time, that's still excuses, because I got to be here. If I want to do this, I got to be here no matter what. So yeah, I do apologize, Scott. I am pretty much wrapping it up here, but I'm definitely going to keep you in mind, man. I know you want to come on. I know there's some other people who want to come on and talk about some stuff, and I'm just about ready for it. I feel like I'm getting to a good groove and into a good place. And yeah, happy to hop on a video with you. The interview Josh Hamilton and I did was successful, and happy to get on Tetron Invest. I'm honored. I'm truly honored. Anybody that even reaches out to me wanting to do anything, like I think that's awesome. And when I started just reading Superstonk and financial stuff as a whole online, I never imagined like people wanting to talk to me or just collaborate, and it's a blessing. It's honestly blessed to do this. But now I'm master of economics, so I got that going for me. That's awesome, man. That's the way to be. Scott's got the right idea. You got to just master whatever you want to be the best at and just most familiar with. I mean, economics, I feel like there's always more to learn, but once you know that core of it, like it makes it a lot easier to go into different details and perspectives, I feel like. So I'm excited for our future conversation. Been drinking beer and pizza, so all good. Dude, that's a good combo. You can never go wrong with that. So good stream. Thank you all for that. Fresh Maker, thank you for being here. I really appreciate that. But yeah, all right. And as you'll see, Zach, from doing this, and maybe you'll have to intervene at some point in the future, I'll say like we're wrapping it up here about 20 times before it actually gets wrapped up, as you probably already noticed. So
Yeah.
you can get used to that. But all right, we'll actually wrap it up here. Wrap it up. So, all right. Thank you guys. Have a good night.